Python tutorial, Moving Averages Strategy Indicators. Strategy indicators consist of identifying trend following or mean reversion asset price patterns. Main indicators include single or multiple, lagging, or leading technical indicators. This topic is part of quantitative trading analysis with Python course. Feel free to take a look at course curriculum by clicking link at description box below. This tutorial has an educational and informational purpose and doesn't constitute any type of trading or investment advice. Please read full tutorial disclaimer at the end of the video. Simple moving averages asset prices overlays consist of trend-following lagging indicators for identifying uptrends and downtrends. As a formula, current period K number of periods simple moving average of close prices is equal to 1 divided by K is the number of periods for which we're calculating the simple moving average, multiplied by the sum from the 0th to the K minus 1 observation of previous period's close prices all the way into current period close prices. Great. So let's go into Python PyCharm IDE so that we can study simple moving averages with greater detail. Excellent. So here we are within Python PyCharm IDE. The first step within the tutorial is to do packages importing. So we're going to import pandas as PD and then matplotlib.pyplot as PLT for the charts. The next step is to do our moving averages strategy indicators data reading. For that, we create a variable, which we're going to name SPY, which is equal to PD or pandas.read_CSV. And then within parentheses, we have first the path to the data file, which is found within that data directory, and that is data file, named moving averages strategy indicators data as a .txt or plain text file with .csv or comma separated values. Comma, index column as date, comma, parse those dates as true. So let's go ahead and look at that corresponding data file. So we double click on its name and we see that we have, as mentioned previously, a plain text file with .csv or comma separated values, and within it we have the following columns, which are date, SPY open, high, low, close prices, volume, and adjusted close prices, which were adjusted for dividends and splits. SPY corresponds to the ETF investment vehicle, which intends to replicate the Standard & Poor's 500 index. Notice here that we have a data with a daily frequency, and we have 1 year of data, which is 2016, therefore 252 rows of data. So going back into the code file, once we've read the data, we continue with moving averages strategy indicators calculation. For that, we are going to create new columns within that SPY variable, which is a data frame, and the first of this is going to be named SMA5, and it's going to be equal to PD or pandas.dataframe, capital D, capital F, dot rolling, and what we're going to do is to calculate the corresponding simple moving average as a rolling mean. So rolling, within it, we're going to select from SPY its SPY close column. So we're calculating it for the close prices, comma window of 5 periods. So this is going to be a shorter period type of simple moving average, also a fast simple moving average, and we calculate dot mean. And again, we create a new column, which in this case is going to be SMA 20 for those 20 number of periods, again using PD or pandas, dot data frame, dot rolling, also calculated on close prices, and now the window is going to be 20 days, dot mean. And the next step is we're going to print for this data frame. So we have SPY only selecting those columns for close prices and the 5 and 20 day simple moving averages, and we're going to print only the first 20 observations with head and 20 within parentheses. And the next step is we're going to visualize these moving average strategy indicators through their associated chart. So here we have figure 1, comma ax or axis, which is equal to plt.subplots. And then within the axis, we're going to plot SPY, and within it, it's SPY close prices, then the 5-day simple moving average, 20-day, with the legend located at the upper left, the superior title for the chart, which is going to be SPY close prices, and together with the SMA 5 and SMA 20 strategy indicators, and we show the chart. Excellent. So let's go ahead and run this code file by selecting its name and clicking run. And what we'll do is now we're going to visualize how it begins running the code within the corresponding console, and then we'll proceed to visualize the chart. So once we visualize the chart, we are going to minimize it so that we can observe the values we printed. Excellent. So here we have the chart. So let's go ahead and minimize it. And going right here into the console, as mentioned, we printed those corresponding SPY close prices together with the 5 days and 20-day simple moving averages. And as we can see here, we have for the 5-day simple moving average, non-availables for the first 4 days, and for the 5th day, it calculated that first simple moving average, which corresponds to those 5 days arithmetic average, and including that corresponding day. And if we scroll down, all the way into the end of that corresponding printed data frame, we see that at observation row number 20, we have the first observation for that corresponding 20-day simple moving average, and again calculated as the arithmetic average of those 20 observations, including the one for that day. So going back into the chart, as mentioned, we have SPY close prices and then SMA 5 and SMA 20 strategy indicators. On the vertical axis, we have close prices, horizontal one dates from the beginning of 2016 to the end of 2016. And then according to the legend, colored in blue, we have SPY close prices, colored in orange, the 5-day simple moving average or the fast simple moving average, and colored in green, the 20 days or slow simple moving average. As we can see from this corresponding chart, the smaller number of periods, such as in this case, as an example, the 5-day simple moving average, the closer it resembles the original time series. On the other hand, the greater the number of periods, such as in this case, the 20 periods for the slow simple moving average, the less it resembles the original time series. Excellent. So now that we've finished studying this corresponding chart and the associated code, let's go back into our slides. And as mentioned previously, this tutorial has an educational and informational purpose and doesn't constitute any type of trading or investment advice. Please pause the video now so you can read the full tutorial disclaimer. Excellent. So with this, we finished this tutorial. Thank you for watching.